Bank warning for 2024. There is a new regulation in place called Basel III Endgame, and it may mean higher interest rates at your local banks, as well as it may affect the first-time home buyers program. Make sure you stay tuned. We are going to go over all of the details, and welcome back, everyone. So very happy to have you back for another update. Now, the Senate Banking Committee held its annual hearing on Wall Street on Wednesday. Lawmakers heard testimony from JP Morgan CEO, Citi CEO, as well as the CEO of Bank of America, Wells Fargo, and many more. Now we are going to go over exactly why they were meeting. Here is all 8 CEOs. Now there's a proposed regulation known as Basel III Endgame that would force banks to set aside more funds to cushion against potential future losses. Now the 8 bank CEOs testified on Wednesday. They told lawmakers that they do not have an issue with meeting the new requirements. However, at the same time, they stated that it would harm consumers and businesses because banks would not have as much funds available to lend out, which would result in them having to charge higher interest rates. In addition to that, the bank leaders said that it would also negatively impact the first-time home buyers program and people's saving for retirement. Now, let's go over exactly what is Basel III Endgame. Basel III Endgame is the title of a package of new banking regulations that could go into effect in the coming years. It was recently green-lighted by the Federal Reserve. However, the proposal, which among other things would increase the level of capital that banks with at least $100 billion in assets would be required to hold, has been met with significant backlash from lawmakers on both sides of the aisle, as well as many bank CEOs. Banks deemed systematically important globally would have to set aside an additional 19% of capital on average, according to the proposal. Banks with more than $250 billion in assets that aren't considered systematically important would see a 10% increase in the capital they would be required to have on hold. If banks have to set aside more capital, that means they have fewer funds to lend out to businesses and consumers, and bank CEOs argue it would force them again to charge higher interest rates on loans, and that is how you and I would be affected. Many top financial regulators argue that having a bigger capital cushion would strengthen banks' ability during periods of financial stress. That would lessen the risk that taxpayer funds would be needed to bail out banks, as was in the case of the wake of the Great Recession. More importantly, Basel III Endgame has not been finalized, and the standard notice and rulemaking process was recently extended to January 16, 2024 from November 30th. So it's still in the making. It has not been finalized as of yet, but if it is approved, it could affect you and I at our local banks. Please share with us in the comments how you're feeling about this new proposed regulation. And of course, don't forget to subscribe, hit that notification bell, and come back for more breaking news and updates. Bye-bye.